Yo, 365, shake my hand and welcome to another Traders War Room where I give you guys my weekly market breakdown, showing you guys all the stocks, indices, Forex, commodities that I'll be buying and selling, not just for the coming week, but really a bigger, broader, long-term market perspective based on the current market sentiment, right? My name is Leroy James Maisiri, and I'm the head trader of 365 Trading Academy, and this is War Room number 91. Real quick, before we start, as usual, a couple of things to remind ourselves as traders. Number one, good things do not take time. What that means is there isn't a fixated amount of struggle you need to go through for you to get to where you're going. And the more you tell yourself that, the quicker the things that you want in your life will happen. Number two, what I am seeking is also seeking me. It's very simple. Look for what you're looking for. If you're looking for consistent profitability in trading, you really need to be working on becoming a consistent profitable trader who understands that good things do not take time, but through discipline and hard work, you can get there. And most importantly, tell yourself every day, in every way, I'm getting better and better as a trader. And a better trader has a trading journal to know what to get better at. A better trader is keeping track of the wins and losses to know what to get better at. A better trader is prioritizing having capital to trade the next day, so they're risking appropriately, because to become a better trader, you have to stay trading. To stay trading, you got to protect capital. Protect capital, a better trader is constantly finding ways to work on their trading psychology, right? So let's just get this whole thing started. I'm very, 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 very excited to be with you today. And I just want to talk about what happened, right? So the first thing that happened this week, oh, mamma mia, was CPI, right? We had, our consumer price index that came in, and I did say I was going to drop a war room, only after this. It didn't make sense to drop one before. And had I dropped a war room, by the way, full transparency, had I dropped a war room before I seen CPI data, I would have had more sales in my pending order list, and I would be regretting that right now. So it's very, very, very wise to always remember that you don't know more than what the market knows, and rather just stay humble, wait for the data, and then trade. Whether we like the data or not, it really doesn't matter. What matters is we trade what you see. Right, so this Wednesday on the 15th of May, and I think I've done short videos on my social media accounts. Let's talk about that. Guys, I've only done 6 videos. I have only done 6 YouTube videos since I've been back. Since I've been back from my long snooze, my 1-hour break, I've only done 6 videos, and already there are fake TikTok accounts popping up about 365 Trading Academy. Right? These are the only videos I've done on the channel, right? So I'm back, right, where I just gave a big overview. Then we had FOMC, what Powell said. Then our first war room of the year, war room 89 and war room 90. Then I had a good trade on USDJPY on my real account, and I wanted to show you guys a terrible trading mistake I made. And this was just me explaining. Me being back and making 6 videos in about, give or take, 11 to 13 days. There's already a fake TikTok 365 account. So please note, these are my only accounts, right? I've got only one YouTube channel, I have one Instagram, and I have one very specific TikTok account. Please, 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 don't be scammed. 365, we don't trade for you. You don't send us your money. We don't want your money. We don't grow your account. We don't do account management. I don't know what else they're offering people. We will not double your money in 2 days, 3 days, 7 days. We don't want your granny's pension, or whatever lies are being peddled out there. We don't. All we do is equip individuals to be able to do for themselves what they need to, right? So we teach you how to do it. We are not in the business of touching other people's money. So the only service for sale, I don't even sell my signals, guys, right? If you want my signals, you just watch the YouTube channel. I'll give them to you for free. I'll explain my rationale. You will know why I'm buying and selling. More importantly, when we don't talk, you will know if I'm in the trade or out of the trade, because I'll give you two different scenarios based on what I'm seeing in the markets all the time, so that you can make the decision for yourself as well. The only thing, the only service that available at 365 is our number one supply and demand course, right? Which is available only through one link down below in the description. You have to register, send us your form. We'll be in touch with you directly via our official emails, etc., etc. Right. So let's get cracking. CPI came in cool, right? I mean, with PPI, and I did explain what PPI was, right? From a producer's perspective, that inflation came in hot. All right, red flag. And I maintain this. There is no business, guys. You have to think about it from a very, simple perspective. If I'm running a business and I'm selling, tomatoes, I don't know, something, potatoes, whatever floats your boat, right? And at some point in time, I'm the farmer. So I own a farm and I'm selling tomatoes. This is my tomato farm here. I've got tomatoes growing. As the farmer, however much it costs me to produce tomatoes, I then have to go find, grocery stores, wholesaler/retailers, right, who are going to be selling my tomatoes to everyday people. I'm going to say it cost me $10 to make my tomatoes. All right, so I'm going to sell them at $15 to these guys. When they get my tomatoes, I'm just making up these numbers, they're going to try and sell the tomatoes at $25. The only time me, Leroy, as a consumer, going to buy tomatoes, and I find that the price has dropped, that the price of tomatoes has dropped to $20, is because these guys, in their capitalist hearts, have figured out a way to reduce these guys' costs, right? Which means the producer's cost dropped to $8, meaning they decided to sell to retail, I don't know, for $12, and somehow price dropped there. But if we come to PPI data, which is what we got on Tuesday this past week, and PPI data says, well, guys, actually, we're seeing an increase in price, right? It is almost very natural to assume, which I did, that CPI is going to come, a little bit hot. And if CPI does not come hot, and it did not come hot, to be very clear, month over month, CPI came in cooler. The consumer price index for the month of April came in lower than expected. And then year over year, we met expectation, right? So if this doesn't happen, this is what you call kicking the problem down the road. You know what I mean? If you've been in a long-term relationship, you'll know there's some fights that you just don't want to have every single day of your life. Just kick them down the road. The inflation problem has been kicked down the road, right? We've got softish data here, but you're going to have to deal with this. So if PPI comes in hot again next month, you're going to have to deal with it at some point in time. However, finally on this issue, this is what Jerome Powell believes is happening. It's what he keeps insinuating is going to keep happening in the markets, right? That inflation is getting cooler and cooler, that there will be no rate hikes for the year 2024, that the Fed is under control, right? So that's their kind of like thesis, and that his real big decision will only take place in the second half of the year, based on the fact that he hopes that this pattern will continue, where we keep getting lower inflation numbers. You see 3.4%, kind reminder, the target is getting this number to 2%. They want inflation year over year at 2%. So we've still got a long way to go. We've got a couple of reports. The next big report that we're going to have to deal with, I think, is the 7th of June, give or take, which is NFP. And I've covered how to trade NFP a couple of times, but if you need help, we'll kind of like deal with that, right? So let's just get into today's war room. Today, I want to talk to you guys about some very specific assets. I want to cover assets I have not yet covered yet since I've been back. Remember, I look at everything. I look at all markets across all asset classes simply because it just makes sense. All right. So today I want to look at a couple of things. Number one, I want to look at Euro Swiss franc. Okay, we're going to look at Euro Swiss franc. We're going to look at the Euro pound. We're going to look at EURJPY. We're going to look at EURNZD. We're going to look at pound Swiss franc. Then we're going to look at pound JPY, pound AUD, pound CAD, pound NZD, NZDCAD, NZD Swiss franc, Euro USD, pound USD, USDJPY, USDCAD, and then of course your NASDAQ, S&P 500, Russell 2000, silver, and gold. And we're really gonna quickly, as quickly as possible, just kind of like map out some levels, right? But before we do that, we have to be of one mind. Remember, given who CPI, right? Given soft job markets, right, which was NFP on the 3rd of May. So on the 15th of May, inflation is coming down according to the CPI report. A week or so before that was NFP with softer job numbers. And then on the 1st of May, we had a dovish power. Now, if you can't see that this is literally how markets are controlled, central banks, big institutions literally run the show, and you truly believe that you have a superior trading strategy that doesn't take into account these things, then I will call you a liar, right? Powell sets the scene on the 1st of May. We are dovish. Everything is fine. Soft labor market shows that. NFP shows that. NFP shows us zero towards wage price spiraling. Then we've got CPI against logic coming through, a little bit softer. All right. So that's what we have. In today's war room, we're looking at markets between now and up until the 7th of June, give or take, until the next NFP. And I think it's safe to say the sentiment is fairly dovish. All right. We definitely are more bullish and very far away from being bearish right now. I'd rather have you be neutral than bearish right now. So if we find supplies today, we have to put that into consideration, that even though there's a structural supply in the chart, what is the market sentiment? Market sentiment influences the current status quo. So even if price, and I've got what, AUD, USD in front of me. This is just an example. This is not a trade signal. Even if prices arrive at this supply, if the sentiment is dovish, it is very possible that smart money can add here, can add longs here. This is why I want you to understand how serious sentiment is. Just because you're now at a valid supply without checking the weather, you are mistaken, right? If all of a sudden it was a sunny day, sunny skies, and then, but by 3 p.m. there's a hurricane and you're not prepared for it, you will lose money. They will add. And the structure presents it that way. In front of us, we can see, yes, sure, we've arrived at a supply, but this to me looks like a PCP, potential continuation pattern. And if you're one of those people like Leroy, what the hell is a PCP? The link is down below where I walk you through all of this in about 66 hours of video recording. Just click the link and purchase the course, because war rooms are literally for signals. But you need to know these things so that when I come here and I point at levels, we're all on the same page. This to me is not the type of reaction I like to see in price when I'm engaged in a sell. Right? This to me does not breed confidence in a sell. That looks like a loading bay area. That looks like buyers, we got this. We've reduced price a little bit. Come buy now. Right? I've given you a discount on the area. And guess what? If I'm buying something, guys, don't forget this. If I go to a car dealership and I want to buy a car, I get the car, they get money. If people are buying at this level, not just people, if smart money is buying here, there have to be a whole lot of people who we have to categorize as dumb in the moment, because they don't know what they're doing and they are selling. For them to buy, for them to offload their longs, someone has to be high in shorts. And it makes sense to have wanted to sell at this area 3 weeks ago, 2 months ago, because this area was created in January this year. So as a stand-in supply, I'm with you. I see what you see. But a lot of things have changed. Prices started to break out of structures. Prices stopped creating lower lows and it started to break highs. Price is now at a supply and is showing a PCP sign. This tells me, just be careful. And the type of supply is all birthed from a PCP, or rather a CP, a continuation pattern, because this is a ranging supply. It's not a peak supply. Leroy, what is the difference between a ranging supply and a peak supply? Well, a peak supply is in my module 2. It's my trader's edge. I always tell you, prioritize peak supplies. There are 7 different types of supplies and demands. They are not equal. I'm taking you back to Animal Farm. Not all animals in this game are equal. All supplies are meant to sell, but some supplies are stronger than others. This is not one of them. It's a continuation pattern. It was continuing a drop from a higher sell, but we have arrived at it now and the sentiment has changed, right? Traders, this is what it means. This is your constant development. Keep learning, right? But if you don't want to click the link down below to learn properly, then you're just slowing yourself down, right? So it was just an example on AUD USD. We'll come back to this chart if it's the chart for today. While I still have your attention, I've done 2 war rooms, war room 89 and war room 90. And I want us to quickly do a heartbeat check, right? I want us to quickly understand where we are with the signals I've given you so far. So the first time I was around, which was, now I don't know if you're going to be able to see it. I hope, it's showing on the screen. I've moved to screen 4. Right, so this is the first, I'm back. And you can see here in the thumbnail, without me, clicking on it, you can see I highlighted NASDAQ, S&P 500, Euro USD, Pound USD, the dollar, and Bitcoin, right? And then here I just spoke about the dovish stuff, explaining why if Powell's going to be dovish, we're all full buy, all right? And then after that, I listed a bunch of assets in War Room 89 and War Room 90, all right? So I want us to look very quickly, like a quick, like is the signals given in this video and the signals given in this video to fully explain why it's worth your time subscribing to this channel if the things I'm saying are actually working and where we are making money and losing money, right? So I'm quickly using, so the first one was when I'm back, which was the 23rd of April, right? So the only big signals I gave there was stuff like Euro USD. I spoke about US dollar parity. I looked at the pound and I just spoke about where I've been, blah, 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 right? So there's really not much going on, right? 23rd of May was somewhere down here and I was looking to sell at these levels. And we got to talk about that today because on the 23rd of May, before Powell came into the market on the 1st of May, which is somewhere here, before NFP on the 3rd of May, which is somewhere here, and definitely way before CPI, which is somewhere here, I was very happy to sell at these daily supplies, and that made sense until the tone, the sentiment changed, right? So, this is what I kind of like gave you. And then moving forward now into War Room 89, and War Room 90 carefully. These are the charts that we're still waiting for, or prices triggered, or we have made money if you took the trade with me, or you have lost money if you took the trade with me, right? So the first one is USD Swiss franc. Let's quickly have a look at it. I'm still waiting. I'm still waiting for a buy here. Remember, I'm dealing with a very soft dollar right now. I'm dealing with a very weak dollar. Once we go dovish, dollar goes down, risk on assets go up. So I'm not in any trade USD Swiss franc. My buy still holds. This buy here is already automated for me. I have a pending order. If I don't like the market, it's my job as a trader to go back and delete that pending order, right? Just in case the dollar has to fall and break through this area. So for example, if job numbers come back negative again, so if we miss NFP again, that's going to be bad for the dollar. The dollar might fall. It might be falling into a demand, setting us up for a buy. Or it might be falling into a demand and breaking, right? So I've got a beautiful lower demand, but that's remember I'm a swing trader, so things do take time for me, right? On the weekly time frame, the daily buy that I want is just below a weekly buy area, so that might need some adjustment. And then there's this lower buy there, right? On the weekly time frame, USD Swiss franc, we can see we're about to see potentially slight drop, right? A confirmation of a drop, depending on dollar strength, right? So USD Swiss franc, a previous signal that I gave you guys, I'm not in. USDJPY, I did a video telling you guys the mistake I made, right? That I should have been, in it a little bit longer. Let's go to the daily time frame. Right, I got out here, right? So clean buy into this area, but I started to second guess things. So on my war room Forex account, on my war room, the account that I take these trades on with you, I'm pretty sure I got down lower here, and then in our COP account, yes, we got out on the supply. But I did do is this trading psychology video, very short, like avoid this trading mistake, where I show you my live account and I show you exactly where I got out, right? Be very, very careful of that kind of stuff, right? So I did get out a little bit early on USDJPY. On the corporate account, yes, I held on to supply, but the psychology here played a big role in me exiting too early, right? So this ran to about a 1:6, but it could have given us a 1:8, right? So if I got out early and I explained why, so please do watch that trading psychology trap. But if you maintain this buy up until the supply level, then you should have gotten yourself a 1:8, 1:9. I got out at a 1:6. This was technically a good trade that I gave you guys. Let's see, USDJPY, probably in War Room 89. All right, there we go. USDJPY. You can see if I hit the thumbnail, everything disappears. But you can see on the thumbnail there, Pound USD, DXY, USD Swiss franc, USDJPY. So if you watch this and listened, you'd have taken that trade with me, put your pen in order, and made that money, right? So that's USDJPY sorted. Next is USDCAD, taking longer than I expected. But I think it's important to be transparent like this. It's important to go back and see what's going on, right? USDCAD, right? I just recently got triggered and waiting. Either way, I expect an L. I expect price to dig a little bit deeper, right? I did not delete this pen in order in time. In fact, I have it on my journal that if I don't like how I feel on Monday, I'm just going to close. Because right now, I'm up by like $3 or $4 or $5 is like very minimum. The trade just started. But this can go very bad very quickly. This can go very, very bad very quickly. Or it can go well and price maintains, right? It's all about where our boy is, right? There's lots and lots, massive correlation between US CAD and the dollar. So if you look at the DXY chart, price has to be at a very stable, nice demand, which has arrived. Unfortunately, I don't have a buy on the index here. I completely forgot to set this pen in order. So I've had to mark the zone gray instead of green. I personally, I would have loved to have a buy there. Right. So if this demand holds and if this demand does what it's supposed to do, what we're going to see is USD CAD is going to rally, right? So if this price, what I'm saying is, if this works out perfectly, at least to somewhere up here in these levels, right? I expect my current trade USD CAD to also rally a little bit, right? Coming off here would not be a good risk to reward ratio. This is the type of trade I wanted to run if and when Powell was not dovish, right? Remember, some of these order blocks were set on the 9th of April, like 30 days ahead of the FOMC speech, right? So now that things have changed, I'm very worried, right? I can let it play out, take the loss, keep to my trading plan so as not to give myself, a mixed data set as I trade in my clusters. But just know, if you're with me, we are triggered there. And if you're with me, I'm giving you a friendly warning ahead of time that trade might likely not work because it was set before with that dovish mindset in mind. USD, AUD, USD is the next one. I really want to be selling in AUD, USD, to be honest with you. It's not something that I want to buy into right now. I really feel like all these risky assets, we look at the S&P 500, we're at an all-time high. US 30, NASDAQ, Euro USD breaking daily supplies. All these assets are going against the grain, really smoking, that cocaine that Jerome Powell has put into the markets, right? Jerome Powell has really given the markets this fake level of confidence. Well, it's not fake confidence, it's Powell confidence. It's backed by Powell data that inflation is cooling down. Let me put it like that. Just to be very clear, I'm very bad with my biases. I'm more of a bearish trader than a bullish trader. I come alive when the markets are selling. So when markets are buying like this, it's not my best day in the office, all right? So that's why I sound a little bit, anti what Powell is doing. But the important thing is we've got to trade what we see, right? So we've got, AUD, USD. I honestly don't have a single trade triggered here. This supply was marked a while back, but obviously from the 1st of May when we started talking and I started marking these buy levels when Powell got dovish. And then, NFP came through that Friday, breaking the supply. This red zone here was broken literally by NFP, right? 365, you would know when a supply is formed, we got glass effect. Leroy, what is glass effect? That's in module 1. The different types of areas of values linked to the different types of supplies and demands, linked down below. Right, but for those of you who know what I'm talking about, you can see, we don't want to touch areas of value that have gone through glass effect. Because when smart money and retail traders and everyone else keeps draining money from zones, those zones get weaker and weaker. Come NFP, final tap, price is gone. And now CPI pushes price into a new supply. If this area is open, if this area gets opened up, right, you can expect a little bit of a pullback from price as they start to prepare their path forward, right? This is literally now, all about time. This is a times game. How much can markets do before the next report, right? How much can markets do before the next NFP report? This is an ugly area to sell, ladies and gentlemen. But overall, in AUD USD, I'm waiting for price to drop, right? So what you now need to do, right, which a lot of you don't, and I'll do this in another video again, is to be working on a detailed COT data report, because you should know normally on average, if you have those spreadsheets done nicely the way I showed you, and you can do them better than I do. I actually suck at Microsoft Excel. But if you start to accumulate that data, you will be able to track in general how many orders happen. So if you go to your COT data right now, if you have it, and you look at the week, does that sound weird? At the week, right? I'm talking about the week, right? If you look at the week of 20-something December, 2023, right? The last week of December, how many sell orders on average did it take to push price down like this? If you do this with your COT, first you got to have the data. Then you have to analyze the data. And then you'll start to get an average number. Oh, okay. When institutions have piled 80,000 sell orders over the weeks, and the cooling zone for longs has dropped to 40 to 30,000, all of a sudden, price starts to fall. When you start to use your COT spreadsheet, there's a spreadsheet I taught you guys a long time ago, it's on the channel, Master Trader Spreadsheet, right? If you start to do that, because doing this stuff with your eyes, the way I do it, takes time, takes years. But remember, good things don't have to take time. And what that practically means is you can learn from someone like me. The years and years of hardship in the markets, I'm giving them to you in 1 hour, 30-minute lessons, so it doesn't take time. If you compile a COT data and you're diligent and disciplined in updating it, you can start to see, okay, we are at a supply. But generally speaking, when AUD USD drops, and I put a 13-week average sell on the Microsoft Excel spreadsheet. It's so far to find right now, so I won't waste any time. But I'll come back to these key lessons, right? As 365 students, I saw Alvin drop, his recent one on the private group, right? That's very helpful. That's very helpful to all of you. So I really hope all of you are taking the time to thank him. I haven't opened it, but I've seen the ones it's done before, and they're pretty accurate, right? So you need to be able to assess how many, sell areas in the most recent COT are in this area. Is it normal? Does price always fall? We're looking for correlations. We've got an order block. We've got a valid supply. What's our governor doing? If our governor is selling, then I'm selling, etc., right? Look at your governor. Right? Coming straight from a strong, dovish month, the month of May, the governor has created a bullish engulfing pattern, driving itself halfway through into a previous bearish engulfing pattern. And if you look to the left, it's just a liquidity range from a previous supply from 2023. All right. So AUD USD is in an interesting place, right? And it's preying upon a what? A weak dollar. As long as we've got a weak dollar, price is going to drop. Look at me. I'm teaching on one chart instead of just showing you guys results, because we actually have to do the war room. I apologize, but I'm going to have to speed through the next, because remember, right now, I just want to show you what we've done so far. All right. So really, guys, this is a beautiful sell that we highlighted. I just didn't take it. I honestly, and I don't really regret it, right? For me, remember, risk reward ratio needs to make sense. And this was not going to make sense to me. But if you took it, because I did point this out in the previous war room, right, that this sell is going to happen, good for you, right? Remember, even if I show you supply and demand zones in the war rooms, I'll tell you, look, man, it doesn't make sense, for me, because I like 1:3, but money is money. And this trade made some money, right? Again, risky assets, they're up right now. So if AD, NZD, you pay them together, you know what to do. There's a supply zone, quick sell, right? Now prices arrive at a demand, and I'm just watching. I am really not in this trade. Because even if you buy here, you still have to contend with the supply that's not yet broken, and it's going to give you the same risk reward ratio. In fact, even slightly lower, because be very careful. This might be the next part that price starts. In fact, if you're in this sale right now and you're thinking about taking a risk, number one, take profits, close the trade, or break even just above this area, because price can't promise you this. I can't promise you this. I'm not the oracle, but this could be the beginning of what we're looking for, right? And then that means you really make money if you took the risk here, right? Not down here. No. I'm talking about the people already in. I'm not in. I'm not those people. But this could make some nice money as a long-term swing trade if price was to go down that way, right? So AUD, NZD, I'm doing nothing there, but there might be an opportunity for our cowboys and cowgirls, or bigger risk takers. AUD, Swiss franc in it, right? But now we shall see, okay? But remember, I got into this trade long before I came back onto YouTube, right? So I just want to be very clear about this. So I can't include this to my risk to reward assessment of war rooms, right? This trade was a private trade I took before I came back to recording videos, right? So this level here that we spoke about is still at play, right? And we've got a supply coming up still at play. So this really, nothing has changed there. So for war room purposes, we can say we are not in, because I'm currently in a previous trade without you guys before I came back on YouTube, right? So EURGBP is next. I'm just watching, just chilling, enjoying the views, watching prices. It eats through supplies, weak yen, high, a lot of power behind risky assets, right? CAD, Swiss franc. I have to fly through this stuff, guys. Remember, this is not the signals. These are just trading results from previous war rooms. I still need to get into this. Price never made it down. Remember, I wanted to buy it down here. I'm still waiting. Price turned. And when did price turn? Well, let's think about it. There's a demand there. Oh, is that why? Not the only reason. There's correlation. Look at this, the 3rd of May. What happened on the 3rd of May? Soft NFP. What's the Swiss franc? Swiss franc will always thrive against the weak dollar. Soft NFP on the 3rd of May. A weak dollar. There's a demand. Everything is correlated. Markets didn't drop to where I wanted, so I'm not triggered in CAD Swiss franc. Those of you who are in it, good luck. Enjoy. CAD JPY. CAD JPY, waiting as far as I know, I'm waiting for a lower buy, not really in it. Seriously, there is just this sale on the 14th of May. I think I was triggered on the 14th of May. I'm pretty sure 14th of May, 13th of May, somewhere in there. But you can see for yourselves, a little bit of money was made. Prices already made a long wick, probably found a hidden demand. Let's go to H4, right? Very clean breaking of a supply. You can use a Kini hash if you really want to see it. There you go, right? So what looked like a supply in this area was see that? This is 5 traders, remember, right? Not everything in life is manipulation, right? Very, 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 very easy areas here. So if I block this out like this with yellow and I switch it to the other side of the candlesticks, right? Complicated 365 candles under Kinihashi. What are complicated 365 candles? The candles that go against the trend for a short term to create a counter trend, which becomes a buy area later on in a buy trend and a sell area later on. If that still doesn't make sense to you, link down below. Just flying through the stuff, right? So you can see with a bearish engulfing pattern, this big here, markets break it, price comes back and buys there, right? So this stuff I've put on. But now I'm more worried about the sell because that's literally what I'm holding right now. I am triggered in a CAD JPY sell. I think it's going to be a short-term, short-lived sell. I don't see any big money coming out of this. You know, I really don't have a lot of confidence in most of the sales in the markets right now. Right. The next one is Swiss franc JPY, which we spoke for. I'm not in it because we're waiting for a lower, much lower buy. Let's go to the daily time frame. I really didn't care about the selling, right? And I was waiting for a much lower buy. But anything can happen in this range. So don't get left behind because I'm waiting for a bigger swing, right? But, you know, these are the type of assets, you know, if I'm going to hold, I hold forever. When I hold forever, I make sure I get in at the best place. Best place, generally speaking, for me, is a place with higher time frame confluency. So I need the weekly and the daily aligned. I wait for that. I wait for the weekly and the daily to be aligned. Euro AUD, according to my charts, to my trades, I've got nothing trading or pending or triggered yet. Euro USD, we spoke about this chart extensively. I told you I want to sell all the way down to Euro USD parity, but in the meantime, risky assets are on. I was very clear about this. In the meantime, buy, scale up until you get to a daily supply, and then I'm going to start selling. And you would know that from this area here, we got the power, 1st of May, right? How are the charts so well aligned to the sentiment, and you still don't want to believe me when I say sentiment matters, right? Look at that. Clean, big green candle into an area of value that we expect buying to happen when power starts to speak. And then this one was made, quite recently. Let's find NFP. NFP was this big one, breaking an H4 supply there. And then we had CPI, this big red candle right here, breaking. And this break is important. What CPI did, right? CPI broke this. Guys, this is a big deal. This area here is institutional selling. You cannot tell me otherwise. This is massive. Only institutions make these big candles, right? This is big. This is where we should have sold in a normal market where Powell wasn't just doing his thing, right? And this is actually broken by institutional data. Inflation data on the 15th of May, which was positive CPI, literally breaks the supply and makes us know that, listen, despite the sell levels here, new buy orders, there's more buy orders in the area, that are currently dominating, right? Now, what's my take on this? Well, we'll talk about that later, but right now, we can't count this for a war room. Okay, well, yes, this we can because it's 1st of May. We spoke about it many times. So you buy. I do have a loss that I took at this area because remember, I did say any daily supply I see, I'm gonna start plotting, some sales. So some minor loss. I mean, on top of this big win here, not a big deal. I don't like this upward movement structure. This to me, look at how many times price left the ladder here, fresh touch. Look at this, right? Buy area. I'm not enjoying this because even if when price starts to come down, there's still a lot of buying that could happen at this level. So just be prepared for that. I still want to see Euro USD parity, but maybe I put out my thesis a little bit too early, and that's fine. When the dollar is ready, I'll get my big sell. My next sell level is obviously here. I'm happy to take a loss if it doesn't happen. And I really wish I had not closed this buy. I wish I'll still hold because when we got to the supply, I held a little bit and then put a trading stop loss. And when this red candle happened on Thursday, I got kicked out of the trade, right? So it's been a very good run. But now I wish maybe I'd held onto my buys a little bit longer and then closed maybe at the supply. I've got a few pending orders launched here. I don't know if they're going to work. We shall see. But right now, once again, we're in a dovish market. So you really want a big anchored supply. Otherwise, it's a buyer's market, right? EURCHF, no trade. Let me show you another minor loss we had or that I had. NZD USD, right? Definitely this failed. This I remember. This did not work out. This was nice, but this was way before we got together, right? And the take profit was all the way down there. And I was hoping to see a continuation, right? When this happened, I wasn't too surprised. And I just assumed, I'm making the charts a mess. Looks like a little kid is drawing. I apologize. But I just assumed that because price cleared this area here, that it was going to go for a higher supply, which is actually one of the major confirmations I needed to continue to sell. And unfortunately, weak dollar risk assets on, price is going to continue to go up. So that made sense. And I took that stop loss hit like a man. And then the last thing was, NAS 100. If you follow me on Instagram and on the social media accounts that I actually said are mine and not the weird TikTok ones, I kept telling you guys, we're looking for a break at the 18,400 area. 18,400, we're going to keep going up and up and up. And that's exactly what happened when CPI data came and we broke through 18,400. I said, we really want to clear this range in the gray. I taught on this. I preached about this. After this supply failed and the sentiment was aligned with what Paul was saying, we should have been in swing buys all the way down here from the 10th of May. We're sleeping from the 1st of May. Had I really known ahead of time what Paul was going to say, I would have been buying there, right? So that's kind of like the stuff we've done, together. And if you really think about it, the wins are USDJPY 1:6. It could have been 1:8 for you if you held it longer. And then we've got my EURUSD 5:1. That's the win, the buy. And then we've got the recent Nasdaq buy, not so recent anymore, which is actually currently sitting on 3:1. You should have gotten into that buy on the 6th of May, right? So those are the main wins. And if you add the wins together, it's a full 9. And if you add the 2 losses, we're looking at a 9:2. All right, so that's amazing. All right, that's actually good. And then you've got a lot of assets that were not yet in yet, right? So the goal of this war room, and I'm sorry I'm only starting now, is to then start to plot the way forward for the next bit of charts. And I'm really thinking this should last us for about 2 weeks, give or take 2 to 3 weeks, or at least up until NFP. We really should have a need to reassess our trading ideas in the next NFP on the 7th of June. But I will be here with you Sundays, weekend after weekend until we get there, right? So I am starting the war room right now, right? So the first asset is Euro Swiss franc, and I'm going to be very short and brief with each asset. Because again, the goal of these things is not to do any teaching, but just to give you market clarity. We've broken a governing supply. Like we've broken a governing supply without even respecting it, not even a red month, right? So somewhere down here, probably a lot of bullish news. This is a very, very sensitive asset. Risk assets are on right now. Very dovish, as long as this inflation data is going to come in soft, I can expect a lot of this, right? So, all the way up to that supply, maybe I expect a lot of drama in between these 2 red lines. I expect a lot of drama in between these 2 headlines. Right now, let's quickly drill down to be very clear. On the weekly time frame, we've recently just broken all of this is that governing supply I just showed you. So on the weekly time frame, you see there's the thing that I just drew right now, right? This is what it looks like on the weekly. So we've just broken that completely. And I think it's time now to just let it go and make this a red zone, a failed supply, right? A failed governor who failed to govern his people, and watch where price is going now. So from a weekly perspective, it would help to have a long-term trend line across there, but I don't think you'd get the perfect touches. These are older trades on the charts that maybe I can delete. I'm sure I've recorded all of them in my trading journal. Now let's see if we can get some type of confirmation, some type of break, something like that, right? It will look something like that. If we're to retrace where it all began, right? And then this would be the major problem, at least on a weekly perspective. I'm sure on the governing perspective, we have to rechange everything, something like that. There we go. And then where to? Well, first target would be to kind of like reach these highs, right? That would be the first main goal of this asset. But after that, after we break these highs, the main goal of this asset is obviously going to be to challenge, the next big supply, which is all the way up here, which I'm sure from a governing perspective, let's drop it a bit. So from a monthly perspective, it will be this whole area like that. And then from a weekly perspective, it will be slightly tighter, right? So really, Euro Swiss franc, we should be bullish. That's just the truth of the matter. We should be bullish, but we should wait for a perfect pullback on the daily time frame. And this is what I hate about Swiss franc charts, long wicks that will surprise you, right? And why are the long wicks? Because markets are not dumb. At least smart money isn't, right? Lower buys will always win, right? Buy low. Lower buys will always win. And so in a situation where you're competing against two areas to buy, just be very careful that you don't get kicked out, right? So you can see here, I'm pretty sure stop losses were hit despite the analysis. And then here, area of competition is so vile that you probably weren't even going to get triggered, or I wasn't going to get triggered, right? Normal candlesticks, you can see I might have even had my area of value tight like that, right? But even at the top of the week of this bull, price didn't actually arrive. It just came to take people's money. Liquidity gone, liquidity gone, liquidity gone. Why? Because don't forget, always look for the lower buy, right, in price. So the next immediate buy, which is not the lower buy, but immediate buy of price would be something like this. So if the buying pressure was really tight, that's a good place to wait. That's all I'm doing on this chart. I don't care, right? And the stop loss must just take into account a very unrealistic value-based demand. There's not a value-based demand, but there was a little bit of sideways trading. But because it's a swing trade, I would definitely have my stop loss below this red wick and not below here, just in case, right? I don't know how high this is going to go before it can come down, but this is what I'm looking at here, right? And then expect speed humps along the way just because I've drawn a trend line. Don't ignore the fact that on the other side here are supplies, but generally speaking, those supplies are not meant to alter the trend, all right? So price, you can have 2 red days in a swing setup. Some of you, when you're in a trade, all you want to see is blue. You never want to see price go down. You never want to see price retract. And that's very silly. And it hurts your trading psychology because the moment price does something you don't like, you panic and you start to overthink your trade, right? 1:3 risk reward ratio for me would be here. If price can arrive here for me, I'm golden. Whatever happens after that, I don't care, right? So that's Euro Swiss franc. Our first trade signal of the day, Euro pound. Let's keep it pushing. I spent so much time at the beginning of this video talking about so many things. I'm worried about my energy, right? So these are old swings that I haven't spoken about in the actual war room. So now building them up into what it is we're doing is going to be interesting. Very interesting. Price did come back here. This was a terrible, is stop loss hit. Then I got in again. But now the question is, can people get in? Let's go. Let's just look at it properly, objectively. Let's rebuild the bias, right? So Euro pound, and if you know me and if you've been following me for a while, I feel like it's been years now. It's been years of me wanting Euro pound to trade and close below this line. Years, guys, years. I've risked a lot of money trying to hold swing cells that will eventually break that line. And it just doesn't want. This is what you call an institutional psychological area. This stuff started long time ago with Brexit, when the Brexit debate was on fire. I mean, this area was marked out for a while. This is the biggest, one of the biggest, market consolidation zones. I mean, we're talking about price consolidation within the same range since 2016. Brexit is over, by the way, but price still struggles to break down below here, right? So I've kind of like accepted it. And I feel like the day I fully accept it, excuse me. Excuse me. Yeah, that was a little sneeze there. Right. So I was saying, as soon as price, as soon as I accept it, that's probably most likely the day price is just going to leave me behind and just trailblaze through this area. But like my USD parity idea, I keep looking for sell setups and I keep trying to pursue them because breaking through the psychological line, and this is the logic, is once we go down, guys, the pips, the gains, the risks of holding such long-term trades is beautiful because there isn't a valid governing demand for a very long time until we get down here. All right, so this could be a very good win. And by the way, I've been trying to sell from all the way up there to there for years, and price just turns, at that psychological area, right? So for those of you joining us now, just in particular in this particular trade, if you look carefully, you'll see that, Friday ended with a new bearish engulfing pattern, and that might be a good clue up for you. So you're looking at hopefully price coming, to these levels to mitigate, right, to somewhat play a role there, and then potentially you can then join me in a sale down, right? But I'll be first looking, because I'm already in, to see what price does at this level down here, right? Because if price is rejected very easily here, and then I'm going to have to close as well and then see what happens, right? I'm going to have to close as well. This is not the best levels to sell at, I won't lie, right? But already a broken supply, higher, a place where price went a little bit higher, and these lows haven't been taken out here. And we've got equal lows with a lot of liquidity down there that still have not yet been taken out. So I really need to see how markets decide to move. So just trade Euro Pound with caution, or completely ignore it until there is greater clarity. EURJPY is our next chart. Right, I'm still waiting for a lower buy. This area of value, this supply here was taken out, right? So let's just go to the governor and fix that. This was taken out, right? This was a very, very significant high at the end of, you know how we just drew a line in the other one? At the end of this downward trend, this was the first market's target that was taken out, right? So now we wait to see. On the weekly time frame, very similar. You can see I've got a pinning order at the base of this whole area here. And then weekly is showing a potential continuation pattern to the upside. So I might even get triggered. And daily is showing something very similar. I would like this area. If not, this is also fine. This is also fine. In fact, I'm happy to adjust my expectations and do this. I am happy to do that, right? So if price could come back and trigger this area, that would be great. But I assume that price is first going to make contact with the supply, and I'm just going to allow that to happen. EURNZD, next one. I apologize. There we go. Oh, this is falling nicely without me. That sucks. Sorry, guys, just give me a second. Just want to quickly adjust there we go. Right, so where are we? Euro NZD. You honestly couldn't, gun to my head, I can't even explain to you why I'm not in this trade. I don't understand how I missed this. And I guess it just speaks to making sure you take proper notes. I clearly missed and this is like a very beautiful trade. And also it's worth noting that when we went dovish and power went dovish and data was softish, EURNZD is one of the few assets that actually sold and not bought. So this is a negative correlation for whatever reason. And it's important to remember that in the future, because we now know how this asset reacts, right? Beautiful daily supply. Now let's see where the influence is coming from, right? And the influence is coming straight from the fact that a governor is being birthed, right? Look at this beautiful month of May is really, 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 a big deal for this chart to just fall, right? So a governor is being birthed, giving direction of flow to the downside on the weekly time frame. A weekly supply created all the way in November last year, right, is finally at play. Bullish engulfing pattern lends us straight into the lion's den, and price is dropping. And dropping it is slightly covering a bullish engulfing pattern. So I assume there'll be problems when price gets down here. But overall, what a beautiful chart, just demonstrating the power of supply and demand. And more importantly, how unfortunate that I wasn't disciplined enough to actually have this trade, queued up and marked up properly, because this would have been a brilliant trade for the month of May. This really would have actually increased. I mean, the sell-off starts on the 1st of May. When power starts to pump the market, this falls. What are the odds you'd get a beautiful chart like that? Right now that we know this, I'm going to make note of it. Which means when price gets down here, check the sentiment, man. The sentiment is still dovish, right? We've got two demands at play, but this demand really has a fresh touch, right? You might get a nice bounce here. Yes, sure. but the bounce will be cut short if the sentiment is still very dovish, right? Because clearly this asset would prefer to sell than to buy. And you might get something like that, right? Up into this area, if you draw a Fibonacci, bearish Fibonacci from there all the way down there, just marking the zones, you can see, right, what it would take to get a golden ratio. And you can see how price has already been playing at this area, playing long before we even knew what was going on, right? Draining this area, golden ratio doing its job and pushing price down. But yes, first we need to get price to get down here so that this Fibonacci reading is accurate. Because right now I've just kind of like projected the Fibonacci range, right? Because we've got a swing high, but our swing low has not yet been made. Please remember that. Remember that Fibonacci is a powerful tool taught in my module 2. Right. So we've got a situation where, price is just doing what it does with or without us. And in this particular set case, completely without me. I'm willing to take a risk here, but in my notes, I have said triple check market sentiment. So don't get angry when on the day price is about to arrive and my alerts hit me, I change my mind. And then you're like, oh, but I took a loss, Leroy didn't. I'm telling you now that this is going to be an assess the markets type of trade, right? Read the sentiment, read the room, right? So first of all, I need price to break below this area, okay? I absolutely need you to break below this area, sir. Then I'll take the trade. I'm happy to take the trade if price was to do this and then come back and then go down. I'll take the trade, but you have to break there. You have to really break this demand. I'll also take the trade if price simply just comes all the way straight down and then comes here. I'll still be able to take the trade and risk money there, but I'm also going to be looking at my sentiment, right? So next, after EURNZD, we've got pound, Swiss franc. My favorite traders are the ones who say my videos are too long, but I'm giving them free signal. There's nothing I can do. Why don't you pause, take a break, have some coffee, come back again tomorrow, take it at your time. But if I can't, I'm rushing. I feel like I'm rushing. And that's why I'm making this comment. Like I've become so conscious of, some criticism that it's actually affecting the way I teach. Some of these things have to take time. And by time, I'm not talking about years. I'm just talking about I have to deliver this information in a digestible way. How unfortunate. I've been waiting here. You can see price turned just before me. How unfortunate. The direction was right. The analysis is perfect. The power supply and demand is played, but the area of competition was just a little bit too thick, too thick for me. Maybe I was a little bit stingy, etc., etc. But the prices left me. If price was to come back here, I'd be very careful, make sure it's coming back while this area of value hasn't suffered a lot of glass effect, because this is exactly what you want. You want price to come into your demand, you want price to trade. But this is a beautiful demand trade, a buy trade that I've been waiting for. And I can see that it seems like price has left me already. I'm not going to chase price. And that's how you end up getting your what you risk a bit way too big. Pound, JPY, our next chart. Let's go back to normal candlesticks, right? Right, as long as we've got a weak Japanese yen, and I've said this many times, and I'll say it again, when we used to be together in 2022, we're buying like crazy. Price came back to some of these buy areas. Like, as long as Japanese yen remains weak, I expect massive supplies to be taken out. I expect them to be taken out. In fact, just so you know, long term, 2, 3, 4, 5 years, I expect for us to be talking about this chart all the way up here. This is how you build positional trades. When you understand the sentiments, the fundamentals, and the market structure, you are then able to plan a big hold, right? So if, price here was always going to break through, because on the other side of this yellow trend line, and it's a supply and demand trend line, right? So it's drawn in line with what market structure is actually doing. And because of that, we do anticipate that these supplies will slow price down. For example, this is the monthly time frame. When price hit the supply, 1, 2, 3, 4, 5, 6, it kept price there for 6 months because it's a governing supply. It's not a small boy supply, but it didn't change the trend. It didn't. It created a range, a consolidations of where banks built positions. And if you were keeping track of COT, you would watch them neutralize their shorts, start to build on their longs. And then one day when their longs were fully built up in the beginning of the year 2024, boom, price exploded. right? So same thing's gonna, I assume, gonna happen here. We're gonna have some type of consolidation, and all of a sudden now, price has built a beautiful ladder. So we might have 3, 4, 5, 6 months of a downtrend as price makes its way back to the slower demand on a governing time frame, right? Which is something that most retail traders just can't wait for, right? So we are bullish though in terms of market direction on the weekly, bullish, and on a daily, bullish, right? So if I was to take a trade on the daily time frame, I would want price to come back here for me for now. And then if it doesn't, this is a PCP. After it clears this area, this high week, price could come back into this zone and then bounce up. I won't take the trade into the zone there. It's just not the type of, I no longer take continuation pattern trades. They just affect my win rate. Not that they don't work, but when they work, they work. But when they don't work, they don't work, and it affects my win rate, right? So that's why I now ignore PCP areas. Pound AUD is the next chart, and I'm flying through these one more time because I'm just giving out signals. If you want detailed market analysis, lessons, etc., please always click the link down below and check out our trading content, our course and stuff, right? Pound AUD on the governing time frame. I'm only noticing now that I think my little ones have made me sick. They were all sick Wednesday, Thursday, Friday, Saturdays today, and I'm starting to feel under the weather. I'm really starting to feel it. So I do apologize for the sniffles. Right. So we've got pound AUD here. Just a no trade for me. As long as you're trading within this weird range, I'm not interested. I'm not interested. There's better ways of making money in the markets right now. So we'll keep checking on pound AUD, but I'm not even gonna speculate on what to do there, right? Pound CAD. Not interested. Long, I'm talking about 2 years of consolidating. Not interested. Price must either break above or break below. Not interested in pound CAD. Moving on. I'm sorry. Pound NZD. Right. Interesting, right? So we've got a very over abused supply, and I'm pretty sure the lighter shade of yellow in there is the multiple daily supplies I found. And then trying to buy through a supply sounds very crazy, but that's exactly what I plotted to do, and that's definitely did not work out, right? Luckily enough, not in this trade, but I'm just trying to get the logic. But sorry, before we get there. So our governing supply is under fire, right? Very weak. And this is not a strong supply on the left, by the way. A supply being run by a long wick isn't. So the reaction is to the left. That makes more sense, right? And you can see that onto the left, the supply can really be overdrawn there. And then you can start to talk about a truer supply, which would look something like this. And then if you look at the truer supply, that looks something like that. On a governing time frame, you've got this, and then you've got that, right? That's problem number one. And then this is now back again, okay? So class effect is now at play for this particular area of value, all right? And I think this area can really just be, acknowledged as a supply, but also ignored because there's a better supply right to the left that price is still reacting to, as you can see there. All right, so now that we have that, very clarified, means all the daily supplies in the yellow zones, the small yellow zones, are for this supply, right? So you've got a supply, then you've got multiple supplies above, the first supply. So it's reacting off an immediate supply. And you can see for the month of May, remember the first chart was Euro. Look at this. EURNZD was that chart. You think I'm making it up, ne? EURNZD was a chart that is selling while the markets are in a dovish sentiment. You see this? Consolidation into a sell. Remember I said, remember this chart, because next time we now know how now we're looking at pound NZD, and we're starting to see that there is a market correlation in how they uncorrelate with market sentiment. So also pound NZD is very, because you can see we're creating a bearish type of situation, breaking a structure, this little upward structure here against a bullish engulfing pattern. to the downside, right? And so these are the type of charts you want to hedge when you're buying. This type of stuff you want to be selling. Also, the type of stuff you want to keep track of when you're looking at sentiment, right? So we really should be selling pound NZD right now and not buying pound NZD. On the weekly time frame, we do have a demand that's on the other side of a trend line, but it is a valid demand that will potentially pause price, slow down price, or even turn price away, right? So this daily area of value here definitely would have failed, and definitely did fail. And so this zone is like that now. And then the supply that broke it is right above it. How disrespectful. That's exactly what happened, right? Sellers are coming in because price is draining a bigger supply, a higher area above, like we pointed out on the governing time frame. And now we have a situation that looks something like this on the daily time frame. It looks like this on the daily time frame. And so that's what we're looking for, right? So if I were you and if I was me, and I am me in terms of trading, I'm going to be looking carefully at the lower time frames here. Why lower time frames for this chart? Well, because the daily already created a supply and prices already come back in. And there's nothing wrong with that, right? So fresh touches happen. What I'd like to see is for price out of nowhere to really just come back up here and then come back down with me, right? I would prefer to catch that particular ride than for price to first come all the way down to the demand and then go all the way up. Because as price is going all the way up, it could build momentum, it could build buy orders, it could build a counter trend. So I would very much prefer price to come into the zone first and then we go down with it. Right? So that's pound, NZD, NZDCAD, no way, Jose. This is gonna break. So this is very like in line with the dovish stance. Supply is gonna break, right? Price is just too aggressively into that supply. On the weekly time frame, same story. There's a weekly supply being taken out or being challenged to the very least. There's gonna be a no trading chart for me. I can already tell, unless if we want to talk about buying, and then yeah, I'll come buy there. In fact, that's what I'll do. I'll only put a buy order there. But I first need this areas removed, one and two removed. Then I'll come put a buy there. Yeah, I'll buy here. This will be a good place to buy. That's NZDCAD, NZD Swiss franc. Go to the governing time frame. Quite a nice road up, right? If this area here leaves price alone, this is a beautiful swing to position trade to the upside. So obviously we're looking for some buy setups. This is the weekly time frame. We want to see some cooking in there. Okay, daily presents an even earlier buy, not the best low buy, but this could work. Right, so if this doesn't work, then we'll just keep trying to buy lower. Price was to break this area to go lower. There'll be other pinning orders waiting for it lower, but this is a very good place to wait for NZD Swiss franc. Euro USD, I've spoken about it, preached about it. There's nothing more to say. The only thing is, I hate that I closed my buy after CPI. Watched CPI for as much as I could. And then, as the New York session was coming to an end that night, I closed, my trade because I actually thought there was going to be a massive retracement back all the way down. And I thought, nah, why ride that wave, right? So I closed this buy, right? But I do believe that price might come up here to challenge this. I already automatically have a sell order here, even though I am fine. I am open to the risk of my sell order being hit. And being kicked out because we are in a dovish market, right? And that's the same for pound USD. I didn't want to double risk myself, so I didn't have a pound buy, but markets moved exactly the way Euro USD moved. So I could have had two buys on Euro USD and pound USD, but I decided to leave it alone just so as not to double my risk. And I'm pretty sure this supply is going to be taken out, and price is going to be dealing with the next supply higher. And just like I said with the buys, I will not be selling Euro USD. I'm just going to be using it as a chart of reference for now until I'm absolutely confident that markets are ready for risk assets to sell. USDJPY is the next chart, but I can see we've already spoken about it. It's nothing to do for me. I'm now just waiting for direction from the dollar. We have a strong dollar. I'll go back to buying my pound JPY. If the dollar is weak, then I might have to concede and start to look for sales. And I promise you the same is for USDCAD. I told you here that we've been triggered. We're going to see if the dollar becomes very, 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 very weak, then we're going to break this demand and we're going to lose money here. But if the dollar bounces off the current daily, this is the dollar, right? The daily, this area here, this strong demand, and we've got upward movement, then this trade that we're already in from War Room 89 should do well, right? That's USDCAD. NASDAQ 100, guys, look, I'm telling you right now, this is wild. These markets are wild. And one day, like I said, it's like kicking the bucket down the road, right? Not addressing, important issues. These markets doing all-time highs, they're going to have to come back and account. We're going to have to come back and have a reckoning, right? So right now, this is a good thing to hold, but, price could start to come down. Personally, I think that there really shouldn't be anything to rock the boat. If you look at the stock market, Microsoft, all-time high, all these guys are doing wild things. And these are the things that have been indexed by the NASDAQ 100, right? So I think that this could continue. The negotiating around the all-time highs could continue up until the next data release, which is NFP. All right. The next one is S&P 500. You're going to see something very similar, just chilling at all-time highs. Breaking supplies above all-time highs, nothing above. S&P 500 is just living its best life, as it should, right? So this is going to be a big deal. This looks like a PCP to me. It looks like a price continuation pattern, and so that means that price is most likely to go up. I look at the Russell 2000, right? The Russell 2000 is still struggling to break it above this daily supply, and then only then can it then start to continue. And it's not a journey of, I'm by my all-time high. It's just upward momentum as it comes, right? And then we've got silver, which, if I'm not mistaken, in the senior traders room, I saw someone say silver created a new weekly demand. I just haven't had a look, but I do remember hearing that or see that. There we go, silver. So let's see what they're talking about. All right, so let's go to the governing time frame for silver. Silver would obviously positively correlate with gold. Damn, all right, this is really trying to eat at this governing supply, even though there's another slightly bigger governing supply above. So it would really look like this, right? It's quite big, right? But price is looking very parabolic, very bullish. On the weekly time frame, which is what I'm really interested in. Okay, there we go. I see it now. I see what he was talking about, right? So this is very good. There's an area of value there that could balance things out. Obviously, it's not always wise buying so close to a supply, right? Buying so close to a supply cuts your risk-reward ratio, cuts, whatever it is that you're going to do, and also puts you at risk. However, if markets was to continue first and say maybe open the gates, open the rooftop, right? Really break through, a supply first, then come back down here. This would be a great buy. Because everything would have been confirmed, right? No more supplies in the way, no more this, no more that, right? In the last chart, guys, and I do apologize if it felt rushed, but I really felt like the video was too long for your attention span, at least according to YouTube, because it tells me how long you guys watch, how long you're in, which parts you stated, which parts you left. And I know for a fact that you guys feel like my videos, statistically speaking, are too long. And I promise you that one day you will understand why. The value add, right? There we go. There's a beautiful gold chart just chilling at all-time highs, right? And I'm pretty sure the extra buying in gold this week was just to make sure that all asset class managers all asset class under management are inflationary proof. So you're just buying a little bit of gold, you're just giving gold the kick it needs actually to keep climbing, right? This is an all-time high area, so I don't care to buy. I don't like buying things when they're at an all-time high. because I don't know how much projection, how far will you go? When I wait for price here, where we agreed on the daily time frame, right? This was easy money on the 1st of May, right? Price went up. But yeah, so these are the two areas I'm looking at. Two interesting buys. This is also good, but too high risk for me. This is also very good, just above. And then if that doesn't work out, there'll be a pending order down here. Right, folks, this is all I wanted to talk about in terms of charts. Thank you so much for watching. I hope you have a beautiful trading week. Please check out the trading course in the link down below and get started on mastering these charts. Right, if you already have access to the course, go back to a lot of the stuff I've taught to make sure that you fully understand it. Right, remember, every single one of you gets a lifetime access. You never have to pay again. There's no monthly fee, blah blah blah. I just want this information away from the videos and inside your heads, which I guarantee will help with your trading. But until then, don't forget to like, don't forget to subscribe. 365, shake my hand, and I'll see you next time. Take care. Don't forget to turn the stop loss. Peace, everybody.